All right, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk post ECB. And what a morning it has been. Good morning to everyone in the room. I want to extend a special congratulations to Pooja for giving birth to her son. What is that, Harry and Ash? Congratulations, Pooja. Best wishes and God bless. That is awesome. Parmendra, good morning to you. Eileen, Hussein, John, everyone in the room. So, quick recap of what's going on. We got a lot to go over today. The Euro crosses are obviously on the move. Mario came out with, as I told you, Eileen, a bazooka straight up. So we were looking for additional easing measures, whether it was a reduction in the refi rate or as a reduction in the benchmark rate. We got both. Okay, benchmark rate has been lowered to 0%. The deposit facility is now negative 0.4%. And they expanded QE to the tune of $80 billion. It's a $20 billion increase per month. They also extended QE purchases outside of the banking corporate bonds, so non-bank corporate bonds. This is a pretty intensive package, guys. And it says two things. A, that there obviously are serious concerns about a slide back and a slowdown in broader economic growth in the area. And two, they're trying to send a signal, and I think that's what Mario did, just like he did with his whole whatever it takes speech a few years back, really just solidifying that the ECB is on course to do whatever it takes to continue the recovery here, rather, in Europe. So where does that leave us on the crosses? There's a lot to talk about. So as always, guys, feel free to throw out any trades or specific pairs that you want to review. We'll take a quick look at the US dollar real quick. Here's what the performance on the US dollar looks like so far to start off the session. You have a pretty one-sided trade. The dollar is finding some really nice support. We noted yesterday on the radar charts, as far as the dollar index was concerned, we were coming into that major 618 extension. We talked about this yesterday in the webinar. We probed just below it, but remember what we talked about. We said if this thing closes above, you're likely to see some upside, okay? And that 12,097 level, 12,092 is going to be the region of near-term resistance, a basic 38.2 of the drop. But more importantly, you have the median line coming off the highs and former trendline support, which has been a nice pivot also coinciding there. So looking for the dollar to see if we have this resistance that'll hold into the close of the session today. I want to prompt anyone on any dollar long exposure, really watch this with interest here. This is a big level. And if it pops through, you're likely to see that run right into the yearly open, 12,131. 12,123 was that pivot from last year. This is the bearish invalidation level. Okay, so on the way up here, I'm still not really interested in getting long on the dollar just yet. More so, if we get up here, I would be looking for possible dollar shorts again to maintain that broader trend. At the end of the day, we're going to have to see what the close looks like, but watch that median line off the highs for the index. So we're right on cue on what the dollar, or the levels, the key levels we should be looking for on the index. Any questions on the dollar index before we turn over? Big levels here. Big levels. We want to see the close. And Eileen says, and there went the pound too. Let's take a quick look at the sterling from yesterday's update. Here's what the update looked like last night. So I gave a British pound setup to daily FX as well. Kind of highlighted it there. Sterling yen, also a very interesting pair, much wider ATR if you're looking for a little bit more meat on the bones. Here's what the sterling looked like yesterday. We were coming into this major resistance. Now, the one thing I do want to prompt on the pound, and something that we talked in the report about yesterday, is we're working off the premise the pound has put in some sort of near-term low. Okay, you had a 3+% rally, 3.3% rally right off the low. You had some pretty radical divergence. Let me bring up the live chart here for you. It's some pretty strong divergence into that low, followed by a 3, some might call this a 4-point trigger break here earlier in the month that shifted the focus back to the upside. Okay, that rally came into major resistance yesterday. It's a 50% retracement of that February range. You had the median line coming off the high, a slider coming off the high, also catching those, and basic trendline resistance off the February high, all converging here. So Eileen, when you asked about the sterling yesterday, we really didn't have too much to say, but a quick, actually not a quick, a long, deep look into the levels last night or during the day yesterday offered some clarity. So I think, again, that 47.50 level we're turning off from, or 50 level we're turning off from, big level of resistance. Here was the consolidation and the weekly opening range we were setting up just below that resistance. Okay, let me just snap these lines for you real quick. Okay, there we go. Just to show you that median line again coming into play right here. And here's the downside break of consolidation, now testing the weekly opening range low. So Eileen, you're at support. A break below 141.11 would validate a near-term opening range break, and that would give us a downside bias. Now, a couple things to keep in mind. Like we said on the daily chart, in that scenario, we'd only still be looking to play a correction in the pound, not necessarily continuation. So on that front, you'd be looking for downside targets. The bullish invalidation level is still at the low day close, which comes in, interestingly enough, right at the monthly open, and the longer dated 88.6 retracement. This dates back to the 2008-2009 crisis lows. So you have 139.21 into 139.10 as our bullish invalidation level. A look at this near-term ML structure also has the lower median line parallel coming into that region. And as long as price stays above this, we'll be looking for that drop to offer some nice long entries. Again, on the scalp, on a break lower, your scalp targets on 140. Check, check. Sorry about that, guys. I think I lost audio for a minute. I think we should be back. Okay, there you are, Eileen says. All right, so where did I leave off? I apologize for that, guys. What I was saying, I think where I got cut off is on the way down here, if we do break the weekly opening range on some continued dollar strength, I wouldn't be looking to play it beyond 140. This is an area of which, again, I'd start to look for some long exposure, bullish invalidation, 139.10 to 139.20. All right, so one other thing that you do want to note is that the momentum signature still remains rather bearish since the start of the week. You probed into overbought territory briefly, but then you saw a quick break sub 40, and ever since that break, 60 hold, 60 hold, 40 break. That was a trigger break also that we saw on that move beyond 141.76. And certainly that puts a bearish tone on the momentum signature. So we'll look to see if you get that break. If you do, a way to play this, Eileen, I know you're very interested in always the entries. If we do see that break into the US Open, you wait for a recovery before we start to jump into the short again. We need something to take our high against with a 37 pip stop. And you look to play those downside targets. All right, but remember that the broader picture here for the sterling is that we've made some sort of near-term low with that drop that we made last month, and the momentum signature that we're seeing. Look for the recovery here to offer some favorable long entries a little bit lower down from where we are now. All right, Dave, you're absolutely right. We'll be paying attention to those. I am looking at the headlines here as they cross. But Dave saying that Draghi spewing prepared remarks now, likely to get some nice volatility and perhaps new lows during the Q&A. Yeah, I absolutely think so. The Q&A session is typically the most volatile part. Obviously, the bazooka that you got today did charge a huge move because I don't think market expectations were for such an extensive revamp to the QE package. But certainly now that we do have it, the devil's in the details. We'll be bringing you those comments as they come through. Okay. Also, one other thing we didn't note today is the LTRO program. They've also issued new 4-year, which is the long-term refinance operation. Again, basically a low interest rate loan that they're offering there. And again, another added stimulus to what they've been looking at. And again, they're calling this a very comprehensive quote unquote stimulus package. And I think that's what the market's interpreting as. Now, if we look at broader equities, you are seeing pretty substantial gains. Here's what the equity board looks like so far. This is obviously yesterday's equity performance in the United States. But if you look at Europe, pretty much a strong performance across the board. CAC 40 up 2.61%, DAX up 2.27%, IBEX 35 up 2.83%, the FTSE UK markets biggest or smallest gains on the session, just up 0.56% so far. So something to keep in mind as far as what we're looking for on broader performance here on the back of this release. Any questions on the sterling before we move off? Still my favorite play. We'll jump into sterling yen. I think that's going to be a beautiful one as well. Basically looking for the recovery here to get back on a position favoring longs while above that low day close. Okay, so that is the British pound. As far as event risk is concerned, you're pretty quiet on that front for the remainder of the week. And also, don't forget, guys, that heading into next week, not only do we have the FOMC interest rate decision, but we also get the BOE interest rate decision on the 17th. So big week next week for the pound as we bobble off the low here. Okay. Also highlighted in yesterday's update was sterling yen. And this is the one I had to redo the charts this morning because it didn't save, but I think I'm all up to date. So here's what sterling yen looks like first on the daily charts to give you a little picture of what's going on. And in comparison with what we're seeing in sterling dollar, right? You had this divergence into the low followed by a trigger break. Looking at sterling yen, very, very similar picture, okay? Really strong divergence into the low, price action lower low, lower low, lower low, a series of higher lows, and not the most convincing trigger break, but a trigger break nonetheless at the lows. So again, here's your March open. Sorry guys, a little bit of a lag here today on the computer. And the premise of the trade, to get back into it, is this. You saw that move surpassing the lows that you made here in February. We came back and checked that low as support. Momentum sitting at 40. There's the slope that you need to work with. Now, the interesting thing about sterling yen is just the clarity and the sheer crispness, if I can, for lack of a better word, of the structure of the decline here. So if we take just this simple 3-point ML formation, okay, and you mirror that slope, okay, make a parallel of that slope, extend one off the highs from September, you can see some really strong pivot action. That's up top. Extend one off the lows from late September. You can saw that caught almost the exact low in December, or excuse me, January, and a really nice pivot here last month. Extend that same slope off the lows from September, and look what it caught. Almost the exact low that we made for the year so far. Add to that you're seeing the divergence into the trigger break and a pop to the upside shifts the focus higher. Now for sterling yen, it's really still an opening range break, okay? And for the week, you haven't made any opening range break yet. Here's what it looks like since the start of the week. You tested the high, which turned out to be an exact 1618 extension off the low. You came back off. You completed a basic 38.2 retracement of the advance off the low. And here you are, full round trip right back into the weekly open. So for sterling yen, it's a little bit different of a picture. Sterling dollar's testing the opening range low. Sterling yen is right at the weekly open, having created or shaped already a very clear weekly opening range. Now, just for disclaimer purposes, guys, the weekly opening ranges, as we've seen before, if you guys remember on, what was that, Kiwi dollar, the opening range for a week literally lasted like 3 weeks. Right? So it's important just to identify these ranges and know what the key levels are. At this point, key resistance is still 162.29, the 1618. And interestingly enough, heading into US trade today, that same slope that we were looking at on the daily chart, right, coincides dead on with that 1618 extension, which coincides dead on with the monthly highs. So very, very, very clean levels here on sterling yen. And I think will be a beautiful play as we get through this. Our favorite move, as we've said before, is still a topside break. On that break, you'd be looking for just an initial target. I would be mindful of this level right here, 162. What is that? 162.68, which is the 211 close, February 11th. That's this close right here. Okay, on that really strong downstretch day that we had last month. And then subsequent targets beyond that, you're looking up for the retracement off of that January high, and that takes you first. Sorry about that, guys. Hold on one sec. Ah, there it is. Sorry about that. That's a 2014 low as far as 163.86, and then a 2618 takes you into the 166 handle. Remember, again, a much larger ATR. For sterling dollar, we're looking at about 30 pips, a little bit over 30 pips. Sterling yen giving you a nice healthy 56 pip ATR per scalp. So keep that in mind. If you're newer to the strategy, again, these wider range ATRs might be something you just kind of want to dabble with, really light as far as leverage is concerned. If you've been with me for a while, this is the bread and butter right here, guys. Nice meaty ATRs with really, really nice clean levels. And we'll continue to be watching this sterling yen. One other thing I just want to note, basic trendline support off the low. Look where it comes in. Okay. And what does that validate? Very, very simple. Key support, weekly opening range low, bullish invalidation. Okay, bullish invalidation. So very clear as far as what we're looking at for sterling yen. You guys know me, and you guys know I'm not real big fan of the yen pairs, okay, in general. If you talk to me about dollar yen, it's interesting here. I do think we're testing resistance. I think if it does break higher above that sliding parallel, that you do see a much more concerted recovery. Of course, yen weakness will help us on sterling yen. So there's a couple of reasons why I highlighted that sterling yen position. And although I'm not really a big fan of the yen in general right now, of the yen crosses, I do think that the sterling yen will probably be our clearest and best bet here moving forward. Any questions on sterling yen from last night? Okay, so moving right along, I do want to go over, we talked about the dollar index briefly. I want to go over the euro dollar, obviously on the back of the ECB. Mario Draghi's comments are still forthcoming here. Some more comments saying that the ECB forecast for 2018 euro area inflation will average about 1.6%, which is below goal. Draghi says ECB must watch for second round inflation effects and says inflation to pick up later in the year. Inflation to stay negative in the coming months. So certainly padding it, saying that we're expecting the inflationary picture to remain pretty subdued. Remember, guys, the global markets are essentially facing a deflationary environment. So all of this efforts from Draghi, from the ECB rather, the Fed, Japan, all of these measures are attempting to stoke inflation. So we'll be very, very mindful of any inflationary comments that come out, both from the ECB or specifically next week as you head into the FOMC. Remember, the Fed's dual mandate, maximum employment and price stability. As far as the unemployment number is concerned, we're sub 5%, okay, which is, according to the Fed, quote unquote, the natural rate of unemployment. So you know that they're focusing on inflation of the dual mandate. Inflation is still lackluster in the United States. We have started to pick up. A lot of the concerns or a lot of the things that the Fed has noted has been, again, quote unquote, transitory. The shock that you saw in energy prices and the drop off there. So they're expecting inflation to start picking up as well. On a different course, obviously, from what the ECB is doing, we're looking for reasons to tighten here in the United States, whereas the ECB is still just upping the game as far as the accommodative measures. But just some things to keep in mind here. You know, here's what the euro dollar looks like now. So obviously, on the swing side of things, we got stopped out 109.35 as far as the long was concerned on the euro dollar. I don't think it's quite an easy trade yet. I don't think it's out of the woods that you just want to sell euros still, guys. And we don't want to stay stubborn with our bias. But for me, I'm going to sit on the sidelines here, and I want to see what the day looks like on the close. If we still close above 108.66, the yearly open came in at 108.70 and change. It's anyone's game still, okay? As it stands right now, yes, we tested the monthly opening range low and rebounded off it. We'll have to see what the close looks like. Here's what euro looks like on the 30-minute. So on its face value, again, objectively speaking, you made a break of the weekly opening range to the downside that shifts the focus lower, looking for a Thursday, Friday low. Well, it's Thursday. Okay, here's the monthly lows, and we're checking them right now. All right, momentum is in deep, deep oversold territory, not an area of which I want to start fading or trying to fight the move. The break back above 30 would suggest maybe you're in for a steeper recovery, but as long as momentum stays sub 30, you don't really want to try to fight this. A break of the weekly opening range, or the monthly, opening range lows, really puts us back in. Guys, can I just get confirmation that the audio is working again? Francis says seems he can't get audio. Mario says it's good. Francis, audio seems good. Okay, thanks for that, guys. I appreciate that. I'll help out Francis here. Okay, so for the Eurodollar, long story short, if you're not in anything right now, I don't think it's prudent for us to start chasing this at this point. You're at the monthly lows. If that breaks, like I said, sayonara. You're right back on continuation for the broader trend. Don't forget, not only is the monthly open, the 764 of the yearly range, all that good stuff. You also have basic median line support coming right off the highs there from, what was that, August, May? Okay, really nice pivots early in the year. Almost caught the exact low here on a close basis. We're back there again. Hey, Francis. Good to have you on board. It says it's working now. Thanks. You're more than welcome, sir. All right. Any questions on the euro? Big day. Big day. I wish I had some more gutsy plays for you guys to kind of jump in, but this was the range break we were looking for. We got it. On an opening range strategy, you're looking for that mid-late week low, and I think we're on our way. Tim says, out of curiosity, do you use IDO search anything for scalps? So, Tim, not necessarily for intraday positions. I'm definitely very mindful of IDO search on the broader searches, on medium-term trades. As I've told you guys before, scalping and near-term trading is not the only trading I do. It's what I probably do most often. But IDO search is just a genius piece of software that allows you to really give you a quick picture of analysis of where you even want to be looking. I don't know if you guys caught that piece that Jamie wrote on Sterling Key, which was another IDO search premier sort of indicator, but it can be very helpful in ascertaining these medium-term trends, Tim. Eventually, IDO search will be implementing intraday data, and that's, Tim, when it becomes a much, much more useful tool for us for intraday trading as far as just trying to really gauge what positions we want to be taking. But on a day-to-day basis, on the intraday positions, IDO search, remember, is based on the daily closes for the candle, Tim. So yes, it can help you ascertain bias. Yes, it can definitely identify and point you out to major trends or major positions that you want to be looking at on a broader theme. But on a day-to-day basis, in and out, you're not going to want to stress it too much. Make sense, Tim? Tim says, "Great, thanks. Sounds very interesting. When they implement that, Sterling Key was my best trade this year so far." It's a perfect example, Tim, of when IDO shines. I mean, there's really power in the software and being able to identify this. Nothing's ever been done like this before. Remember, the guys, our buddy is actually a buddy of Jamie who went to. They know each other from high school. He, was. Hey guys, sorry about the sound again. We'll have to look into that. Amir says, what do you suggest on Eurodollar? Didn't fully get the picture. So for Euro, I mean, Amir, if you're not in the trade, man, right now I really wouldn't be doing anything. I want to see what the close is going to look like today. If we close above the yearly open, 108.72, I actually do think you get a decent rebound. but we have to stay prudent and we have to stay disciplined, Amir. So at the end of the day, the weekly opening range objectively broke to the downside. So we should be looking for a Thursday, Friday low. If we get a quick recovery like we're getting now back above 30, let's see what the 5-minute chart looks like. Maybe you can get a scalp on this. Okay. We actually do have some price action here to work with. You had some nice divergence here into the lows. And a decent trigger break on the highs. Wow. Okay, so that was actually a really decent long position right here for a near-term scalp. Remember, the ATR is starting to widen out a little bit for the euro after tightening earlier in the week. We're looking at about 25 pips per scalp on this. But thanks for bringing this up, actually, Amir. This looks quite interesting with a really quick reversal here in momentum, both on the near and medium-term time frames here. Okay, just some more comments coming out of Draghi. Says the loan growth in the euro area is still too low. Says new facts could change stance on rate path. Draghi says ECB doesn't see any need to reduce rates further. All right. Okay, a little bit of a softer tone here, saying pretty much we've come out with this huge bazooka. We don't see any need for us to move forward for additional easing. Banks can get better LTRO rate tied to lending levels. New LTROs have maturity of 4 years each. Very interesting. Okay, so they've essentially padded that comment, padded the move that they made today, guys, by saying that it doesn't look like they're going to have to do any further rate cuts or any further easing. Says growth-friendly composition of fiscal policy is needed. We've heard that before. Reform efforts must be stopped or stepped up, rather, in most area nations. We've heard that before. It says oil price drop reflected in economic projections. Your area growth outlook still tilted to the downside, and it reflects global uncertainty. Okay, so he's playing both sides here, but the main takeaway is that they're sort of a one and done for now. No expectations for further easing, and you're seeing the euro really mount an assault on that comment. Here we are back at the weekly opening range low. So it's good that we're together as this happens here. Guys, at the end of the day, if we break the weekly opening range low, recover, and move right back into the range, that invalidates the short signal. So at this point, I want to see what the US Open looks like. And if we're able to mount a high through the European opening range high, which is right here, I'd put us right back in the opening range again. And I'd still be looking for a break of this once again. You're absolutely right, Dave. It says Euro Oz round trip. Oh, Euro Oz with a 200 pip round trip. We'll look at that in a moment. Interesting. And guys, this is sort of the devil in details we were talking about early in the session. This is what happens when you get these central bank talkers. The market has the initial reaction. One guy can come out and just say one little quick thing, no more easing down the line, and here's the quick reversal. So back to the daily and back to the focus on this key region. Still might be a nice upside play for Euro. Not changing the tune on it. Okay, we'll need to wait for a reset on this. So let's see if we can get a pullback in price. Again, if we can figure a trigger here at some point heading into the US Open, might be another opportunity to get along. Anything that you would take would be a stop against the low. So you need to make sure that you can fit that stop against the low within a 25 pip ATR. So where or what level would you jump in? So Amir, was that Pete? So Pete, I would be jumping in if I can get a 35 or a 25 pip stop against the low and a trigger on the high. So a pullback towards like 87.80, 87.70. Remember, that's the yearly open. If we get a dip into that region, a stop against the low, if we have a trigger on the upside and momentum, might be a beautiful play. Your initial targets would be back up here again, what we just hit, 109.23, which remember is the sorry about this, guys. Computer is just frozen today. Too many things open. Okay, that's the December high day close. That's what I just want to figure out. That's the 109.24. So you're seeing some kickback off that. Pete says, great, thanks. I appreciate that. Pete, Amir, let me know if you have any more questions on that. I hope that helps. On the euro as well. Let's take a look at Euro Oz here for Dave. He was saying that they're looking at Euro Oz with a 200 pip round move here. Right. Yeah. So this guy, Euro Oz, if you guys remember, we talked about it earlier in the week. Really, really contentious move for me because of the basic support that you're looking at on the daily chart. And here's what it looks like once this chart comes up. Here's what I'm looking at. So the lower median line parallel for the ML extending off the highs from January and February. Yesterday, we literally dipped right into it and closed back above that key support region we were talking about. This is a long dated 38.2 retracement. So we broke back below it, still pushing below. Euro-Oz is a different story for me, Dave. I'm not really interested in getting too aggressive on this, just because I do think that the Aussie still has some more upside stretch. So if that's the case, even if euro does recover versus the dollar and sees a nice rebound, I don't necessarily think you'll want to play that or express that through euro-Oz. Again, if we take a quick look at what the Aussie dollar is doing in and of itself, yes, you're seeing some kickback here. Once the chart comes up, oops, there we go. So the Aussie dollar is at the 50% retracement. This is off the range highs from, if I'm not mistaken, May. Yeah, so there's the range high from May, and there's the 50% retracement that you're checking now. Interestingly enough, you have just a basic trendline support. Okay, parallel off that, extending off the February highs, takes you right into where we are right now. This is a big resistance region for Aussie. So if we do break higher, I'm looking for that median line, but on that stretch, you could keep Euro Aussie pretty level. So that's my only caveat, Dave, with the Euro Oz and where we stand right now. I do like the broader trend, but is that a break of the lower median line parallel? I don't know. I have to see what this ends up like today. I'd need to get through today's highs, or specifically 147.50 again, before I get comfortable in trying to do anything with this. Much, much wider ATR as well, guys. 50 pips on a quarterly basis is what your scalp targets would be. So, Dave, does that help, man? I wish I had some more conviction on you in Euro Oz, but you're looking at a trade that's a little bit, well, I wouldn't say a little bit, very sensitive right now, in that you have Aussie coming in support, you have Euro testing a break of major key support, right? And Aussie holding resistance. So we're going to want to see how that dynamic plays out. Other things or other charts from yesterday's radar charts, I just wanted to go over real quick what crude prices are doing. It's going to be another big play that everyone's going to be watching today. Remember, 38.31, 38.47, major resistance. Near-term support, I'm looking at the 100-day moving average just at yesterday's low, and that coincides perfectly with a basic trendline support off the low. Here's what crude looks like right now. Okay, so we're still holding that resistance range as we speak. Okay, if you get the top side break, very clear cut targets at 39.85 into 39.97, you're basically looking at a nice confluence here of 100% extension and a 786 longer dated. The major critical resistance, I know we're talking way up front here, guys, and no one's expecting this, but we need to know the levels mapped out beforehand, is 143. 43. You're looking at the 200-day moving average. You're looking at a 618 retracement. This is off the decline from those, or this is off, rather, the range here. Broader dated 618 extension from the decline and the 200-day moving average. Add to that, okay, if we zoom out, the median line structure we've been following comes right in that region as well. If that wasn't enough, the current median line structure off the low heads into this region as well. So real critical as far as what the top side targets would be on a breakout scenario. I do think that you possibly see a hold here today, maybe another kickback, but the range focus is either a break sub the 100-day moving average, 36.40, trendline support, or a breach above 38.40, 38.47 to see that continuation for crude prices. But broadly speaking, guys, we're still working with this ML structure. So as long as we hold above the ML, likelihood is for a continuation or a push higher in crude. Any questions on crude prices moving forward? We'll be paying close attention to this. Now, we also, let me just bring up something real quick, guys. We also did just get the release of Canadian data, and I just want to bring that up real quick as well. So you had the Canadian new house price index came in a little bit weaker than expected. Continuing claims for the United States is also something we wanted to cover, a little bit better than expected, a little bit lower than expected. And the capacity utilization also missed here in Canada. More importantly, what I wanted to highlight, guys, is tomorrow's Canadian data. And tomorrow you do get, let me just bring it up for you, the Canadian employment report. So here's what it looks like, and here's what the expectation is. Remember, we had a spill last month of 5.7 thousand jobs for the month of January. That's the net change for employment in Canada. We're looking for a pop-up of 10,000 with the unemployment rate expected to hold at 7.2%. Now, the CAD crosses have been very interesting. Here's what they look, or here's what it looks like now in dollar CAD. Okay, so here's what it looks like in dollar CAD. This thing is going to put in a near-term bottom at some point, and when it does, we want to be prepared for it. At this point, on the back of what we did yesterday, an outside reversal day off of resistance, okay, former support, really nice pivot in price, resistance, we saw a rally right into it. Yesterday's outside reversal day taking us back to below the 200-day moving average, shifts and pushes the focus lower still. Now, the reason I'm looking for a low is a couple of different things. You're seeing that momentum is starting to turn here, just ahead of 30. And on the basis of what the dollar index is doing, I wouldn't want to get too aggressive on continuing to press this lower. Remember, I don't know, I think Jamie went over this with you guys last week or yesterday in the webinar, but dollar CAD's working on this would be the 8th consecutive week of declines, guys. Okay? That doesn't happen too often. And you can bring up a whole different host of different indicators that we can look at to see when the last time those kinds of things transpired. You can bring up a indicator called consecutive sessions or consecutive bars. This is available on fxcodebase.com as well. And it tells you how many times we've seen a stretch of that magnitude. And if we look at this weekly chart, the last time we saw, right now it's 7 down weeks. This week would be an 8th. You got to go back quite a ways, guys. Quite a ways. Okay, so here's the last time we even came close to an 8-day consecutive decline. Okay, or a 8-week consecutive decline. Where was it? Okay, remember this is a weekly chart here, guys. So the last time we saw that was back here in 2009. That was followed by a 4-week, almost a 5-week, except for that little blip, rally that took almost 50% of the entire decline and saw a recovery. Beyond that, was down here. This was the 2007 low. And certainly that, again, over the next 3 weeks, recouped a good portion of the major decline off of the 2007 early high. Okay, and we can keep going back, guys. And every time that you see that, you can see that an 8-week, specifically an 8-week decline has given us some really sharp and stern reversals, a mean reversion trade. Again, these are weekly charts. So all of these reversals really tend to suggest near term, you're coming on an extreme, Near term, you want to be cautious about any type of pressing on the dollar CAD short. With that said, what are the levels that we'd be looking for possible support? Let's go back to the daily chart. And one level I do want to just check out, bear with me one moment, is an extension here off the high. I want to see if that yields anything interesting. Come on. Okay, that 100 comes in along that 618 anyway. Okay, so just to highlight where we're looking at again, this is a 618 retracement longer dated 129.82. The 100 off the high, so two equal legs down, still takes you to 29.65. I do have a soft target right here at 130.49. I don't want to stress it too much, but it has been a pretty decent pivot in price. Long story short, bias remains in place of the 200-day moving average, and that's the break that you would need to invalidate it. Ultimately, like I said, we are looking for a low here upcoming. Again, on the back of an 8-week decline, if we do finish this week, you would expect to find some sort of near-term low in price heading deeper into the month. So keep that in mind. Eileen saying it's not waiting for the New York Open. Wow, what's happening with the Euro? Let's go back. See what these comments, if Mario's saying anything new here. Draghi, ECB expects substantially easier financing conditions. He just keeps playing both sides, this guy. Let's see what dollar yen is doing, or euro rather. Blast off. Wow. Okay, that's a definitive move, guys. That's the definitive move. That's the break of the opening range high for the week. That's the break through the 200-day moving average. That's the break through the 618 extension. That's a reversal any way you look at it. So we'll be looking to buy pullbacks into the U.S. Open. Yes, you're right, Eileen. We didn't get it pull into the open. It happened before. So we want to stay prudent here. 1120 is the 618. 1167 is a longer dated 618 that we'll want to pay attention to. But the major key resistance is still 1250, 1263. Remember the daily charts. Remember the levels that we've been looking at unchanged. I really do like this to the upside above 1045. What a reversal. I apologize. We weren't looking at that. Jeez. All right. Draghi, ECB voting rotation has had no impact on discussions. Says expects substantially easier financing conditions. We already read that. Risks to growth made it to the downside. Says majority in favor of action was overwhelming. Oh man, let's see if that's going to do another swing here in the euro. Back at 1045. Just a basic stretch of the rally we just made off that huge round trip turn in the euro. Gives you a 50% retracement at 109.70. Remember the the open is at 108.70. Let me bring that chart back on the daily. And that 618 is on 109.36, which is very close to that December high day close. Okay. Look for a pullback into one of these regions, guys, and a short trigger to emerge. Or, excuse me, a long trigger to emerge. This is a reversal. This is actually a really good exercise. This is a reversal in momentum, and it's clearly ascertainable because you see multiple holds of momentum into the opposite side of the trade. So, for example, here's a break into overbought or oversold rather. The test gave you some divergence and the rally coming into overbought condition. So from oversold into way overbought on the pullback, we'll want to see support at 40 here. And that is going to be a signature momentum reversal. Okay, from oversold to overbought, hold at 40. It'd be the same thing on the way down. It was from overbought to oversold, hold at 60. So you know what to look for heading into the US Open. I want to see a trigger down lower near that 618, near that 50%, try to get a run back at the highs. But at the end of the day, remember, we'll want to see the close of today clear 110.45 on the upside, or that 109.24 level on the downside. Wonder which of Draghi's cousins traded it perfectly today, says Dave. Oh, that's ECB for you guys. That's a shame because this swing trades just got taken out. That's the way it goes sometimes, guys. There'll be plenty more opportunities. But it's good to know that the broader picture that we're looking at in the euro is kind of still on point. Okay. Guys, I want to open up the floor to questions. Any questions, strategy, pairs, anything you want to look at before we close out this last webinar of the week. A quick look at Aussie Swiss, which is a scalp that we were looking at earlier in the week as well. I just want to kind of highlight where we are in that trade. Very, very, very clear trade for Aussie Swiss, guys. At the end of the day, it was from the 8th. At the end of the day, this thing made a quick break of the weekly opening range. That happened at 74.55. That put the upside bias in play, looking to buy pullbacks. You got 71.50 or 75.10 rather, which was a level that we highlighted yesterday in the webinar. We got the pullback into support to check the weekly opening range high as support, and it rallied right into key resistance that we were looking for. That key resistance level near term was right here at 75.50 into 75.46. Here's where we are. Okay, so for Aussie Swiss, you've now made a run into that key resistance, a reversal off that key resistance. Here's the 30-minute looks like. Okay. So again, a trade that had really clear triggers. Again, we want to make sure that we're following these throughout the week, guys. Here's that opening range for the week that we got. There's the break. Remember yesterday's webinar, we highlighted 75.10 as a near-term target. We came right into that, checked the opening range high support, ran into that major key resistance, and here we are pulling off. Likely to see a much more substantiated drop-off here. There's a couple things you want to pay attention to. A, divergence into the highs. B, I want to see that 40 break in momentum, just as we talked about in the other chart. From overbought, I want to see a break into oversold and a rally into 60 hold for a reversal in momentum. We're starting to get the onset of that now. Okay. And second of all, the other thing you want to pay attention to is where we are in trend on the broader trade. This is a sliding parallel. This is the 50 line of the ascent off the lows. Remember, this orange line we were looking at earlier in the week is just a sliding parallel extending off that low swing. The gray line here is the actual bisector, the 50 line of this top side of the ML formation. We came right into it, literally, just a little bit later of schedule, a couple hours later than expected, and then reversed right off. So off of this region, I would expect to see some more pullback on Aussie Swiss. And here's what it looks like on a little bit more of a zoomed out picture. Okay, so you can kind of get a picture of where we reversed off of. I'd be looking for support down at the median line, bullish invalidation, the weekly opening range low. As long as you stay above 73.40, we're going to continue to favor the upside in Aussie Swiss. Questions? Craig says, what's your favorite setup right now into the end of the week? So, Craig, I'm going to be definitely getting involved in sterling yen. I'm just waiting for my levels on that. I love the sterling yen position, and I love the sterlings in general. If you guys remember, we go through phases here. Where a lot of you will be like, what's going on with pound or what's going on with euro? And we'll kind of just stay away from it because the clarity just isn't there. Even yesterday when Eileen was asking about the British pound, I really didn't have a very clear picture of what I wanted to do with it. But now that you're starting to get clarity in price, structure to the advance or the decline, this is when it starts to come back into focus. So for me, Craig, with all honesty, the sterling pairs are all on the table right now. Even if we look at sterling Oz, something I was looking at yesterday, I think could be a decent play moving forward. I think the pound has seen some really strong down stretches, and it's about time or due for a little bit of a playback here. Sterling Oz. Look at this thing. Oh, I'm sorry, not Sterling Oz, Sterling Key. Here's what Sterling Key looks like on the daily chart. I was talking to Jamie about this yesterday as well. And love the levels. Look at how clean that looks. The base that we turned off of was such a huge region. How many times have you heard me say this in the webinars, guys? My favorite plays: 100 extension off the high, coinciding with a 618 off the low, or vice versa, 100 off the low with a 618 off the high. Whatever way you want to look at it, the reversal here adds conviction to the trend. This break that we made yesterday, objectively, is a break of the March opening range high. Looking for a rally back towards 215.12, 215.55. I'd be looking for a pullback to get back on the long side. But near-term resistance, you still have a little bit higher. And not only is this the yearly open, but it's also the yearly opening range low. So if we break back through this, it would certainly shift a whole different picture here for Sterling Key. And I think this thing is a sleeping giant. I think this really has the potential for some strong upside moves once we get out of this formation. So that's another one I'll be definitely taking a look at for sure. Also, the crude trade, although you can't trade it with your FX broker, if you guys have futures accounts, I definitely recommend that you have a future account with one of the major brokerages. Just you can take advantage of some of these moves in gold, take advantage of some of these moves in crude. And crude is another trade, obviously, that we just talked about, which will be very, very interesting. And you're going to see a lot of headlines. As soon as this thing kicks off, guys, you're going to get people throwing their hands up. Oh my God, we're going to see the reversal in crude. The rally's over, yada, yada. Forget that noise. Forget that noise. We got prices pretty well under control here. It's been continuing to, go through these levels with precision, and we're going to continue to use price action to dictate our bias, putting aside all that noise that you see on TV or on the financial news publications. All right, so this is going to be a big trade over the next 48 hours, especially heading into the end of the week as we see if this resistance holds. I do think, like I said, you do get a downside move here and a hold into today. Eventually, be looking to buy that pullback, looking for that topside break. I just want to go over CAD yen ahead of tomorrow's CAD employment data as well. This is something that we didn't put a report out this week, but I have been watching. Here's what the daily looks like for CAD yen. And I've been following this ML structure off the low. It's a little bit more of a unconventional ML structure, just because the reference points that we're using are not absolute high-low highs. But I do want to mention one thing. Irrespective of whether you're using a pitchfork or whether you're using basic trendline support or resistance, the what's the word I want to use? The way we approach it is exactly the same. So instead of drawing this pitchfork, I can just simply take basic trendline support. Okay, I'm just doing this sloppy just to show you, and just mirror that to the levels that we're looking at. Okay, so long story short, you're testing the the median line right now. I just deleted it, but you see the picture. You're testing the median line right now. This is also a basic 236, okay, from the decline off the highs that you made in December. And a push through this, what are you looking for? Critical resistance at 80, essentially 87. Okay, you have the yearly open in purple. You have the February highs. You have the upper median line parallel for this formation, which has been in play for over a year. And they all line up just sub 87. Just sub 87. So big levels here for the CAD yen as well. Here's what it looked like on the intraday chart, and I left the analysis on this because it got invalidated, but I wanted to show you what I was thinking. Here's that ML structure. Here's the opening range for the week. This is the ML I started the week looking at, okay? And in fact, it played out beautifully. And once we got a break below this level right here, which was the initial weekly opening range low, I thought it was, sayonara. I was involved in a short on this. I got stopped out on the secondary short once it reversed, but look where it reversed off of. I was looking for another short off of this region here. We plowed right through it, and now we've made it through the upper median line parallel. So a lot of people will be saying, well, Mike, what's the point of doing this downside slope? You didn't know that this was going to turn over. It was just heading into support. But that's the point, guys. Not only do we use these MLs to guide where price action should be going, we can also use them to invalidate what we're looking at. So I was looking lower. Once we pop through the highs here, we're out of the trade. Done. Finito. We're no longer looking to the downside. In fact, this just made a break of the weekly opening range high and came right back in. Okay? Neutral bias for now. Neutral bias for now. Risk is to the downside while below that median line. Inevitably, we would be looking to buy. Okay? So heading into tomorrow's CAD data, with what dollar CAD is doing, you can see some further CAD losses, or further CAD strength rather, pushing that dollar CAD lower, giving this lift possibly into that key resistance range tomorrow before turning over. But the real focus is on that yearly open, on that upper median line parallel, and on the current operative median line off the lows here. So another trade, Craig, for what I'll be looking at. Haven't really talked about it too much here, but certainly, again, a decent ATR, 145 pips on a daily basis. You're looking for about 37 pips per scalp on this one. Nice wide range ATR, also offering some opportunities as we get deeper into the week. Looking for opportunities to get a kickback, to get back on the long side. If the data comes out extremely poor tomorrow, or especially if we see continued yen strength, you could get some downside move on this. At the end of the day, I'd like to see the top side pop. I'd be much more interested in playing long. All right, Craig says, thank you so much for your insights and teachings, Mike. Hey, you're more than welcome, Craig. I appreciate the questions. If there are no other questions there, that takes us right into 9:29. The U.S. Open's on tap. Listen, guys, keep the powder dry and just stay, nimble, okay? Don't start jumping into anything. It's late in the week, and we're also the bazooka package that we got is still going to be over and over and discussed and drilled down to. At the end of the day, price action is what's going to be driving us. And as we look at the dollar index, came back right off that region. We probed through. Look where we're trading right now. Again, keep your eye on that 200-day moving average. Key support and bullish invalidation is still 12,026, that 618 extension. So we'll be looking for a possible break below that. All right, guys, we're going to wrap it up here. Same to you, Eileen. Have a great weekend to everyone here in the room. Stay safe, and we will pick things back up on Monday morning. Remember, the free public webinar on Daily FX will be back on here on SB on Tuesday, Wednesday, and Thursday. Full schedule back on tap next week. Best of luck trading, guys. Have a great weekend. Cheers.